So when will the next US recession begin? In this video series, I'm going to be discussing the infamous R word. That's R for recession. Is it coming? When is it going to come? And how bad is it going to be? Stay tuned, you'll see. I'm Kiwi. I'm Kiwi of the Coast, your luxury real estate specialist, helping you maximize and sell the value of your coastal home. Now, if you're new to the channel, don't forget to subscribe. Let's jump in. So if you're worried about a housing downturn, let's consider the 5 factors that we're going to discuss next. Number 1, when is the recession going to hit? Now, if we look at the charts, most of the experts agree that sometime in the next 12 to 18 months, we're going to be in a recession. So what we did is we combined the results of the experts to look at when that's likely to occur. About 20% of those folks say it's going to happen this year, 2019. The majority, nearly 50%, saying 2020, 21% the following year. So the consensus seems to be next year. And of course, we've got a very crazy and tumultuous year coming up in the political scene, as we all know, with the election coming up next year. So we need to stay informed, not panic, keep a clear head moving forward. And that brings me to number 2, which is defining what a recession is. So a recession is defined as a temporary period of economic slowdown in industrial growth, okay, typically over the prior 2 quarters. And we have to be very, very clear here that a recession does not equate to a housing slowdown. Think about that for a minute. Because if we look at the last 5 recessions dating back to 1980, 3 of those recessions, home prices actually increased. One of those recessions, it went down slightly, and of course we all know what happened in 2008, down approximately 19.7%. So number 3 is, will it be as bad as 2008? And this is when bad mortgages on Wall Street led to a meltdown in the banking industry that spread globally. And look, it's very natural for people remembering 2008 to think it's going to be the same this time. And statistically, that is very, very unlikely according to the experts. And here is why. We have to look at the triggers. Now, those same experts, when asked what are the triggers, surprisingly, or not surprisingly necessarily, number 1 is the trade policy. Hey, we all know that we're in a trade war with China and so on, and that's affecting the economy. No surprises there. Number 2 is, of course, the stock market. Stock market has rocketed up. It's at all-time highs. We always know when the stock market's up, only got one place to go. And of course, there's the continued geopolitical crisis that's going on with countries like Korea and around the world, and we don't have any control over that. But here's what's really surprising is that the housing downturn potential actually is number 9 on the list. That means there's 8 other triggers that could occur, according to the experts, before housing. So housing is not number 1 this time. So we all have to control the narrative and rein in our fear, because it's very likely that the next recession will be over before anybody realizes it's even begun. So number 4, price. Now, what about price? Well, remember what I said before, that in the last 3 of the 5 recessions that we've had since the 1980s, prices actually went up. Okay, so the general consensus is that while there'll be a slowdown in price appreciation, and this means prices won't rise quite as quickly or as big a percentage, the consensus really is that we're going to still see moderate to low price appreciation in our marketplaces in this next recession. So number 5 is affordability. Now, if we look at goods, and if there's a scarcity of goods, the price tends to go up. But there's a big difference between goods and houses, because most people are purchasing homes with a mortgage. So the issue is not so much price, but price relative to purchasing power. So let's look at housing affordability back to 1990 through today. Now, if you look at the green line, which is today, the affordability at 150 relative to the rest of the market is typically higher everywhere except for the red zone. The red zone was when affordability was way up through the roof because we had the Great Recession. The normal market, the blue area to the left of the red, shows that currently our affordability, because that line is higher, is much greater today than it was in the normal market preceding 2008. It's great news for home buyers. Let's look at the typical mortgage payment as well. So we've seen with interest rates trending down and continue to trend down even as the Fed lowers rates here, that we're seeing that the average payment is dropping for that typical 30-year mortgage with 20% down. And again, that gives the buyers a lot more buying power. Forget about the price, just look at price relative to buying power. The mortgage payment is part of that equation. Finally, if we look at payment as a percentage of income, we'll see that today, 16.6, our payment as a percentage of our income with rising salaries and wages is below the 21.2% norm that we've seen prior to today. So payment, percentage of income, is going down relative to the norm. And again, showing a clear indication that buying a home is easier today than it was 2 years ago. Look, if that 30-year mortgage rate, interest rate, declines just a little bit more, it's likely that we're going to see the best buying environment in the last 20 years. Hey, I hope you found all that information valuable.
Now it's time for the Kiwi Squeeze.
Hey, and now it's the Kiwi Squeeze time, and this is where I asked you the juice. So here's the question. You home sellers out there, have you seen prices actually drop in your marketplace? Not relative to listings, but relative to the homes that have sold in the last year. Do share, comment down below, and I can't wait to read your responses. All right, guys, continue your real estate education here. Click or tap on the videos. We've got a great series for you. You're going to sell your home for more in less time. We're going to help you do it, and we'll see you on the next video.